Hi, my name is Deon Rebello, and this is a Bullion Vault. Hi, Willem, how you doing?
Well, in yourself, thanks, Deon.
Good, thank you. So this is episode 48. We too short of the mythical 50, and I think we've done kind of well. If you consider that our frequency from the beginning of last year up until probably about October was we were consistently getting one in every week. And then, of course, just under sheer workload, we kind of have gapped it a bit. And currently we're doing one per month. I'd like to try get that back to at least two in a month. Yeah.
Yeah, it was interesting when we were discussing what episode is it earlier, and I said 35 or 37 or something like that. I was quite surprised when I heard 48. So yeah, we're almost at the 50.
Yeah, so again, from the last episode we did, it's about roughly what a week ago, 2 weeks ago.
Yeah, around about there.
Yeah,
I think it was.
and it's interesting. I mean, if we look at gold, it was sitting around $5,500, $5,005 an ounce. We up to 5,100 and just short of
It's
$70 an
actually
ounce.
just gone over 70 as I'm
Well, there
looking
we
at it.
go. So it's amazing what a couple of weeks can do for gold, and then also silver. I mean, silver, when we had the last episode, it was sitting around $77 an ounce. It's up to just short of $90 an ounce now.
Once again, just over 90.
Broke the 90. So there we go. Even what I wrote down, 10 minutes ago, is no longer actually even relevant.
Yeah,
Okay, episode done. Bye.
well, not quite, but anyway, yeah, it's actually very interesting to see how these prices have rallied. And I mean, we it was if I'm looking at this now, it was actually early this morning, late last night, that we saw a massive jump in these prices. Um, but I think a big part of it is, of course, the fact that this US Supreme Court has ruled that Donald Trump's tariffs were illegal and it needs to be paid back. And then President Trump said, well, I'll just do it another way then, and then announced a blanket 10% tariff over everything based on another piece of legislation, and then woke up the next morning and said, you know what, let's make that 15. And the entire world said, what?
I've got to say, he adds massive value to the fact that he's so inconsistent. You know what he reminds me of? And with all the respect in the world, he reminds me of a 5-year-old ADHD child. And I do have one of those. Well, she's 9, 10 years old. And again, it's that kind of thing. It's just all over the place. It's this sounds great. No, 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 we'll change that. Oh, we'll rather do that. And as we go into this, what were we talking about? Oh, you want to talk to that? And he's the same kind of thing. So again, it's interesting.
Well, the thing is, it's fine to have one at home, but you can't have one making global policy.
No, and especially like a country like the US where it has a knock-on effect to the rest of the
And
world.
this is the thing now, and I think this is what has spurred the bullion markets on a little bit. You know, we've got Europe, we've got the Eastern countries, we've got basically the entire world looking at this and going, but what's next? How do we, where do we go from here? We can't count on anything you say because tomorrow it will be different. We've got agreements that we signed under your last round of tariffs that you introduced, and now what happens to those? So it's adding a ton of uncertainty, confusion, and obviously the markets react to that uncertainty, confusion. Um, it does drive the bullion prices.
Yeah, and another fact, and I kind of also knew this would come into play around probably today, is we've just gone through the Chinese New Year, and they were all back to work, I think, yesterday. So there was an expectation that the markets would start to ramp up. In fact, a lot of reports I've been looking at, they spoke of a massive ramping up over the next couple of weeks. Again, um, Trump adding that fuel to that fire of momentum, definitely. And without a doubt, it would stimulate already a very uncertain world where they then look towards safe haven assets such as gold, such as silver, and that plays straight into the prices growing.
Yeah, and I mean this is also why, you know, when we hit the silver at $120 market peak, and we saw that massive drop, and people were panicking, and people were, oh, I need to sell off now, and it hit 70, and they went, get rid of it. And that's why you don't panic when something like that happens.
No, and absolutely in the market we're in, that's a buying opportunity without a doubt.
Definitely. I mean, in the space of, I think it's around about a month now since the big dip. Just call it the big dip. I like that. Since the big dip, it's been a month, and you know, we're seeing we've seen it climb from 70 odd. I think it went below 70 at one
Yeah,
point
yeah,
at the bottom, and we're sitting at over 90 again.
yeah.
So, you know, had you sold when it hit 70 because you panicked, you would have lost out massively. And that's the thing that I always at least try and reiterate in situations like that is don't panic.
You say that what's interesting is the main part of the market that was affected with that sudden price correction or drop was a lot of the retail buyers because they buy in bulk, right? And they've got a whole client list which are buying coins and they price them up according to the market prices and so on. And they pre-order all their stock. And then suddenly what they paid for was at that price, and 2 weeks later, it's dropped by 30%. And what I thought was quite interesting over this period is the physical price, and this is globally, remained way above the paper price. In fact, it covered that difference in margin, where a lot of the retailers selling physical product had said, hold on, we purchased at this price, we're receiving at this price, we can't sell below that, it's a loss. And the market didn't stop. As you mentioned, people probably did sell out of fear, but I think the vast majority actually saw it as another buying opportunity. Yet the pricing was still high, and that didn't even stop it either. I mean, I spoke to a retailer today, and they bought, I think, 27 mega boxes of Kruger silver Krugerrands, and that's 500 rand, 500 Krugerrands, silver Krugerrands per box. So you can do the math there. They've already sold out every single one, and those came through on Monday.
Yeah, man, I mean, it's I don't think it's put the brakes on people actually wanting to buy. People are seeing this trend, and the trend is once again bullish, not bearish, bullish, and they're seeing this go up again. Yes, there was the drop; it was a scary moment, but they went, oh, but look, it's recovering and it's going up, and it's going to continue to do that. So, people, I think, do still see the value, and especially with something like silver, because yes, it has increased significantly, you know, from when I started even at this company. It was dirt cheap, to be frank, and it's increased significantly from then, but it's still affordable.
And what's interesting, and I saw this, and I think I even discussed it in the last podcast, where for me, the fundamentals, even though with such a sharp drop, and I mean, of course, a lot of the mainstream market commentators or news agencies were saying that there's a massive drop, the market's about to crash, and this and that with regards to silver. And then next moment, it dropped from that just short of $120 mark, and it went, as you said, to just under $70, and then just popped up above that. But even then, in the context of where silver was this time last year, where it hadn't even broken $50 an ounce, let's put context here. The fact is, it had a drop, which is significant in percentage, yet it still fell way above where it was the previous year. And what it also said, and I said this in the last podcast, was the demand for the product, for the physical, still exceeds its supply. And that speaks volumes too. Yes, big drop, but it's still elevated. And I mean, we even said this, I think, where you see the prices from the beginning of this year to now, and there's no real difference.
Yeah, I mean, there's two things you need to look up. The first is the Kindleberger-Minsky model of booms and crashes,
Yes.
and that's always the thing that you see is you see the institutional investment sort of sneaking in just before it starts rising. The global public gets wind of it. They start buying. The prices start shooting up. Then you get the mania phase where everybody is in on this. Everybody wants this now, and we're willing to pay whatever we want to get it. Prices go absolutely parabolic, and then you've got your drop. And that was exactly what we just saw in silver. And then, of course, you've got your cup and handle formations, which you get the little peak, and then you've got get the drop, and it sort of settles after that. And both of those are. I couldn't give you a better example.
Well, what's interesting, if you talk about a cup and handle, as far as the stock, the graph formation. If we take a complete step back and we look at the 50-year mark, so in other words, from 71, where it peaked out at an all-time high then, and then it dropped and it remained very low, and then into the early 2000s started to grow, and then into the 20s it then started around 2020 started going up. And again, if you then take that, we still even had hit the peak on the other side of this cup formation. And again, that, as you say, is then the handle then will come into that. So we are still nowhere near that peak on silver. But again, we're going to come back to silver, but I just wanted to also then discuss gold. And we found quite an interesting article with regards to, and funny enough, it was 71, if I remember correct. And basically, just give an outline of the actual the article.
So it's quite interesting to look at what did gold cost in 1971 and what does gold cost now. And the way we look at that is, or the way this article looks at it is, what was the hourly wage and how many hours would it take at the average hourly wage to actually buy an ounce of gold? And the results may shock you.
Let's get into them.
So we look at 1971, gold was $43 an ounce.
Yep.
And your average hourly wage was $3.70 an hour. So the time it would have taken you, the time you had to work to buy 1 ounce of gold was 11.6 hours. That's less than 2 days of work to buy an ounce of gold. And then we go to 2026 and we're looking at gold sitting over $5,000 an ounce, an average hourly wage of $28. But the time to buy 1 ounce of gold has increased to 179 hours. So, it's the same 1 ounce of gold. It's the same 60 minutes per hour that you're working. However, if you worked for 12 hours, you could have bought an ounce of gold in 1971. If you work for 12 hours now, and this I think is the most absolutely mind-blowing piece of all, you can buy 0.07 ounces of gold. So I think that's pretty much what it illustrates is, obviously in 1971, the US ended the gold standard. Mr. Tricky Dick stood up there and said no more. So the dollar was removed from the gold standard. And then money has no longer been anchored to a physical asset.
Yes.
And the supply of dollars, they could just print more when they needed it. So it's kind of a combination between not really the value of the metal getting that much more expensive, but the actual value of the money getting that much less. And I think that is the biggest thing that we see on this. So basically what's happened here is the amount of money, the supply of money has gone up significantly because, it's not tied to a physical asset anymore. But the supply of real goods, services, and the purchasing power declined over time. So, the energy that we're putting into earning that money is a lot more demanding at the moment. And if we look at it, gold hasn't changed much in thousands of years.
Yeah.
However, what has changed is how we value that. And I think that's the biggest thing we're seeing here is that ounce of gold, the value we attribute to that ounce of gold has gone up significantly, while basically the rest of the monetary system has almost regressed.
Yeah, and again, that's also inflation. That speaks to inflation. That speaks to, as you mentioned, the purchasing power of the dollar, and that's over this period of time, which is not a big period of time. Yet it shows that just over that period, gold has remained, if not grown, outperformed pretty much everything else.
Yeah, I mean, gold has been around for since humans basically started trading. It's been money, and it still remains money. And you know, I think one of the things that gives it its exceptional value is its scarcity. There's a finite amount. Once, you know, the supply, let's say you found a nice vein and you've been working that vein, you've been mining that vein, there's a good supply, and then it dries up. Now you have to work a little bit harder to get that gram out of the rocks.
Yeah,
And all of that comes at a cost as well. So
absolutely.
eventually, I think what it comes down to is the scarcity of gold and knowing that there's no easy way to just make more. And it's pretty much the same with all of the precious metals. And I mean, silver is one of them. Silver, if you look at the actual production of silver, it's very rarely that silver itself is mined specifically to mine silver.
Yeah.
A lot of the times it's a byproduct from mining platinum, from mining gold, from mining copper, or whatever the
Zinc.
case might
Yeah.
be.
Yeah. Absolutely. And again, that's also lent towards the growth, or the demand of silver being out exceeding the supply, is because of that it is a secondary product of other mining activities. And again, I mean, I remember a good couple of years ago, and you mentioned when we first started the business, silver was dirt cheap. I mean, an ounce was under $400. I think we paid 350 Rand for an ounce. In dollar terms, that would have been probably about 12 to $15 an ounce. And it was, now you see where it is, and that's in the space of 5 6 years. It's just shot up. And again, it does come down to that demand. It comes down to its a silver being, especially industrial applications, its demand has, with the whole new EV and the green, uh,
The green economy, basically, the green
yes,
drive, the green energy drive.
yes, the whole green energy drive, that's has been a big fueler of the demand in silver, because silver has got the highest conductivity and so on. So it fits in line with that demand.
Yeah, that's the thing. The demand for silver has increased dramatically, while supply has either remained stagnant or regressed. And it comes down to the fact that you do not mine specifically for silver. And yeah, we're seeing, I mean, millions of ounces of deficit over the last few years. And you can see why silver is actually doing as well as it does. Finally, and this is the thing, I mean, we haven't even reached its true value yet. If you look at how useful it is, how versatile this metal is, we actually still undervaluing it.
Again, I think at the beginning of the year, I did say that, and at that stage, silver was really running hard, that we would see $150 being broken. I mean, with that massive drop in the space of 6 weeks, we back online to 90. 150 is a good, what, $60 away. But I do believe that we'll hit that before mid-year, without a doubt, on the current demand and the current demand across the board on silver.
And as I said earlier, it's still relatively affordable when you're looking at silver versus gold. You know, I can go buy an ounce of silver if I really want to. I can't go and buy an ounce of gold just because I want to right now. That's the difference.
Yeah, and again, I mean, we're gonna just go off topic here a bit, but we've had a lot of inquiries last year for copper. And at the time, we looked at the manufacturing costs, and it was very clear that it cost more to make it than to actually buy the metal. And we put a couple of feelers out there to a few key clients, and most of them came back with our logic saying, well, the value of it is X and the manufacturing is above that, it makes no sense. And we kind of have shelved that. Yet, and this is across the board, the demand on silver ounces right now has been unprecedented. The demand across the board from all different companies that I speak to has they cannot keep up with the supply of silver ounces. And we joked about it. I mean, we spoke about it earlier, saying, but it doesn't make sense.
I think you mean copper, not silver.
Did I say silver?
Yeah, twice.
Sorry. So, I mean, what's your thoughts, Willem? I mean, here we go. We've had an inquiry also, and as I said to you, we costed it. We looked at this. We've looked at the manufacturing side, what it will cost. Gave the price to the client, and they're like, "That's great."
Well, it depends what you're buying it for. You know, if you're buying it as an investment and you can actually buy a great deal of it, then, you know, it might be worth hanging on to it, but the price actually needs to increase significantly before you will see that return. However, and we do urge this all the time, you know, hang on to your gold, hang on to your silver. You'll see the returns over 20 years, over 30 years, etc. And if that's what you're doing, then yes, maybe it does make sense. You know, we don't know where the price is going to be sitting in 20 or 30 years or 40 years, maybe 50 years. Maybe you're saving this for your retirement, and this is actually a way of getting your hands on tangible metal
At dirt cheap prices.
at dirt cheap prices. So in a way, you know what? Maybe they are being absolutely brilliant.
Again, and we are in this space, and you know, for many years, I'll reiterate that we were the champions of silver, saying silver's coming, silver's going to come, and of course you have a lot of people coming in and saying really, and you know, and we would say, and like I've said, and I've spoken about this exact incident April last year, where I was at a birthday dinner and I sat next to one of my brother's friends, and very wealthy man, and he made it very clear, like he was kind of almost, you know, like, oh yeah, you know, he knows about silver and gold, and you know, it's like a waste of time, and that was April, where I still justifying the need to buy into silver because there's a massive growth expected. At that stage, it was sitting about, I think 35 odd dollars an ounce, if I remember. And then just literally within the space of 3 to 4 months, it just went. I still haven't bumped into him yet, and I will add, when I do, I will say, yeah, that little silver thing.
It would be interesting to get his opinion on silver now, yeah. But also the other thing that we have been champions of is platinum for, I think, the last 3 or 4 years.
Yeah, it's four
We've
years
been
in
we've
July.
been telling people that platinum doesn't look great right now, but it's coming back.
Yeah,
And I mean, if we look at where platinum has come from over the last year, uh, it's been absolutely insane. I think it's been one of the best performers once again.
yeah. Again, out of all the precious metals, especially its run towards the end of the year, it actually was, I think, if not the top performer in precious metals last year. In its growth, I mean, it's this is also 2 weeks ago, it was around $2,026 an ounce. We over $2,286 an ounce.
Yeah, I mean, looking at it now, it's just ticked up again to 2287. But yeah, I mean, we were looking at a year ago, if we just, you know, go back 12 months from now, we were looking at platinum under $1,000 an ounce.
Yes.
It's sitting at $2,287 an ounce right now.
Yeah. Again, I think what maybe in the next episode we need to just do a review of the champion performers of 2025, and we can superimpose that onto 2026. Again, I think platinum, and we know the reasons behind platinum. There's a massive demand within the hydrogen sector. We've spoken about it. AutoCats has been very strong for platinum, but also investment has definitely stepped up. We've seen it going back into that position that people are buying it to invest in it and to hold it because of its growth.
Yeah, and I mean, you know, we've seen demand across the board for both silver and platinum. And once again, platinum is immensely useful for thousands of applications. You know, it's not just an investment opportunity. It's used in medical field. It's used in um, chemical chemical processes. It's used because of its unique properties, and you know we see the demand across the board for that.
So interesting enough, I mean, just going back to silver, there was another article that we were looking at, and it was basically saying that there is a case for silver to 10x. In other words, we're sitting just short of $100 an ounce. So to 10x that would be $1,000, right? And again, if you had said to me 3 years ago that we would see silver at $100, we knew it would grow, but we didn't anticipate that it would come so quickly, especially that last 6 months of last year where it just went parabolic. Again, this sounds like unattainable. It sounds crazy, but let's just break down the argument on this whole story. So historically, there are two major ratios that flip at the same time. So you got the Dow and gold ratio. That's the Dow Jones level divided by the gold price. Then you got the gold silver ratio, which we know is gold price divided by silver price. They both swing from extreme optimism in equities to extreme pessimism. So they generally will favor how the markets move based on the current trends. And from this, they sketch silver that is undervalued in comprehension. The move can be dramatic. So right now, gold is sitting at, and this was talking around $5,000, just over. Silver was sitting at $77, a gold ratio of 66 to 1. So 66 ounces of silver to 1 ounce of gold. We know the gold silver ratio, we've spoken many times about it. That still shows silver is undervalued in line with gold. Even though silver is ramped up as it's done, gold has also gone up. So that ratio still keeps silver in better monetary value or better value in line with gold.
Yeah, I mean, if we look at that once again, we've seen it go from over 100 to 65, which also is just an illustration of the actual value of silver rising in relation to gold, and it's sort of a representation of the value attributed to silver going up.
Yeah. And again, we're in the gold silver ratio, just for someone listening that they're not too sure about that, is when the gold silver ratio gets to around 30 to 40, so 30 to 40 ounces of silver to 1 ounce of gold, it starts to say that silver in relation to gold is becoming expensive. We sitting at 65 have got lots of movement to go. Again, the Dow gold ratio sits at a 9.8. In prior cycles, and this is the 1930s and then the 1970s, these ratios eventually compressed towards historical lows. Okay. Using conservative and mid-cycle assumptions, the Dow gold ratio falling towards 2.5, and the gold repricing accordingly, that would make it $19,800 in that scenario. Gold silver ratio compressed to 19. So again, it's that pulling down where then it would be, so silver would be way overvalued. That would then give silver a value of around $1,000 an ounce. What this also does say is it's guaranteed. This is theoretical. So again, it's looking at different things, but over different periods of time. This happened where these two ratios came into play in the 30s and then again in the 70s, where we had two big runs. Again, 30s, we think of it was the Great Depression. There was a massive economic shift globally. We look in the 70s, that was when, as you mentioned earlier, when Richard Nixon, old Tricky Dicky, removed the dollar from the gold standard, which changed monetary policy as we know in the Western world forever. And we were introduced to modern monetary policy, which got a problem, just produce more dollars. And that has created massive debt levels. I mean, the US is in over $130 percent in debt to GDP ratio right now. And they are going chomping through the trillions of dollars of debt, and it's just accumulating and accumulating. So, again, if this cycle continues and resembles the 70s, the timeline could extend to early 2030s. So, what it's saying is, we're not saying that the price will go there now, but it's highly likely, based on the current fundamentals and the current market situation, that silver by 2030, by early 2030s, can have the ability to be around $1,000 an ounce.
That would definitely be something. I would be very happy to see that for one, but $1,000 an ounce does sort of make one want to say, come on.
My argument to this thing is, remember when the guy from the Silver Majestic, it's a silver company in the States. He been champion $100 an ounce for silver, and everyone said he's an outlier. He's on the complete end of the scale, and he's not in any touch of any form of reality. And this is I'm talking not even 3-4 years ago.
Yeah, I mean, look, obviously,
First Majestic, that was the
First Majestic.
company, but I'll get the guy's name.
Well, I mean, obviously, at some point, it's going to go there. It's as simple as that. If we look at the fact that, we were just now talking about, what was it, $43 an ounce of gold. We were literally talking about $43 an ounce of gold, and I'm pretty sure, had somebody said to them at that stage, one day gold's going to be $1,000 an ounce, they would have said, "Come on." So you know
exactly,
what?
but even $5,000 an ounce. If we talking just in the last year, if I'd said to you January 2025, I've got a feeling, it's just a sneaky feeling that gold will break 5,000 this year, you would have said, Deon, what have you been on?
I probably would have told you, Deon, go sit down, take your medicine.
Exactly. So again, the company was First Majestic, and the guy's name was Keith Neumeyer. Now, he, within silver circles, was always known as like way out there. He said silver will hit $100 an ounce, and everyone said, yeah. And a couple of people said, if you break down these scenarios, and Mike Maloney from goldsilver.com did that, and he says it is possible, and it's very possible within the near future. And he kind of nailed that also. So again, I think it's quite a nice way of looking at the current scenario, the current situation, and saying, okay, we by early 2030s could be sitting at a gold price of $500 plus an ounce with ease.
Silver price, you mean?
Silver price, my apologies.
I mean, it's difficult to wrap your mind around the absolute unicorn event we are witnessing right now. I don't think people appreciate enough what is happening in terms of precious metals right now.
Again, and I remember that one episode where I got very serious and very not happy or concerned about the current status in the world. I still hold that opinion. I still believe that at some point we're going to have some massive market correction / recession / depression. It is on the cards. We look at the US markets. We look at how overvalued a lot of their stock market is. That there's a massive bubble sitting there. Then, as you mentioned, Donald Trump comes out and we're doing tariffs across the board. No, we're not. Oh, we're going to do them. And then, of course, gets pulled into the courts, and now he has to change them. And he's like, well, then I'll do it this way, as you said. That doesn't speak of confidence of one of the world top leaders to be running a massive economy like the US and literally just digging themselves deeper into a hole.
And add on to that, the absolute insane investment being poured into AI right now, which I've said before, I think it's a bubble and it's going to pop at some stage. So, we've got a lot of stuff going on, and I think overall it's just absolutely a crazy world right now.
One thing I'm sure of, and for me, this is probably a good way to finish off where we are, is my feeling on precious metals is more than ever resolute on needing to hold precious metals, especially gold, especially silver, especially platinum, because they are showing growth. They're also showing, like we said, we looked from 71 until now. And I mean, imagine buying an ounce of gold for $43. I mean, that's insane. But that said, that speaks to the world we're in, this massive uncertainty, and this is a way to also limit and limit a lot of that losses that would be eroded due to uncertain geopolitical events, economic events, such as what's happening in the US right now with Donald Trump and all these tariffs and so on. China rising also, and the strength from the East, that's also going to add a lot of friction politically.
Yeah, definitely. There's a lot going on, and it's difficult to keep track of it all and to predict where all of this is going. But you know, we try our best. We get predictions which is outlandish, like $100 an ounce of silver, and then when it hits that, we see $1,000 an ounce of silver, and we go, that's outlandish. But you know, pretty much everything that we've looked at over the past 2 years, I would say that we saw, and I thought to myself that that's absolute insanity we've seen happening over the last year. So, yeah, I'm not going to rule out that $1,000 of silver. When is a different story, but I'm not going to rule it out. It happening, I would say, before the end of the next decade.
Yeah, I think it was an interesting thing that I just wanted to bring into the conversation today because, again, it is a mathematical scenario. It's looking at past, but again, we've been told you want to know the future, have an understanding of the past and those cycles, and that does reflect forward. I mean, Ray Dalio speaks very much about that. Mike Maloney of goldsilver.com also speaks a lot about that, using the famous Winston Churchill quote about, in order to understand the future, you got to know what happened in the past. I am paraphrasing massively, but it's something to that extent, and I do think it's important. Does it change our feelings on this? No, I think we in the right position if you're holding precious metals. And as I've said, even with those drops, the purchasing of gold, the purchasing of silver has not stopped. In fact, it's increased, and the demand is just there. And I think it's this is as we speak about the Minsky and Kindleberger model, is this does speak to the public phase, the mass awareness phase, which speaks of a parabolic growth in the price. So we're definitely there and thereabout. And again, that does speak to everything that we've been going on about it.
Yeah, and I think I'll just close off by saying the world we're living in today, if we look at the previous ones, we're talking about 1930, 1970. How did people find out about these things? Well, either somebody in the know told them, and if you didn't know anybody in the know, either somebody in the know told them, and if you didn't know anybody in the know, well, then you just didn't know. Today, I mean, we're sitting here, you're watching us say these things. If there's mass media out there, everywhere you look, you can find news, you can find information. You're sifting through social media and stuff like this pops up on your feed. It doesn't matter if you've never looked at it before. So it's going to come from somewhere, and you're going to know about this. And so I think, I mean, I don't know when the Kindleberger-Minsky model was actually first released, but I think it might be time to revise when that actual public awareness phase happens, when that comes into play, because I think it's happening a lot sooner. And yeah, you probably already know about silver before it hit $120. And that's why its big crash right after that seems that much more dramatic, is because everybody knew what was happening. And oh wow, look at that. If you didn't know what was happening so far this year and you looked at 1st of January and you look at now, you'd say, wow, silver has really been performing well.
Yeah, you'd be saying, my word, it's gone up, and they would have missed that big blip, which was a great buying opportunity, which I told clients. But just in closing, I mean, I did share with you the news that we have lost one of our really big champions and supporters of us as a company and of this podcast. I mean, he used to comment quite a bit about what we're doing, and if there's certain things he didn't like, he made it very clear. But just a moment and a thought to old Ken. I'll just keep it at that. I don't want to mention his full name, but you are in our thoughts, and Godspeed on your new journey, and just best of love to his family.
Definitely, Ken. We'll miss you, and we'll see you next time.
Take care. Bye bye.